massive warm welcome and a huge thanks to Alan Miltz, who is joining us this evening, this afternoon, this morning, wherever you are in the world, from Melbourne, Australia. It's always a pleasure to catch up with my good friend Alan. I know that we haven't seen each other face to face for a while. And yesterday you were due to be in London, if all things have been equal, but they're not equal right now. But Alan is a dear friend until it comes to Manchester United, and then things slightly go a different way. But no, dear friend, and also, more importantly, from today's perspective, he is co-author of Scaling Up, specifically the cash chapter and the power of one, that I know for a lot of my clients is such an important notion that you're going to be touching on today. You are always, in terms of working with the software and developing the software, which we again use, and I think you mentioned earlier that your analysis techniques are being used by hundreds of banks around the world. And Cashflow Story, how many countries is Cashflow Story being used in now?
96 countries around the world.
Yeah, and it's also just poignant just to point out that we may well have a couple of businesses who are joining us from Beirut this morning as well. I've got a lot of clients in Beirut, so our thoughts go out to them right now. If they aren't able to join us, hope they'll grab the recording. So we just wanted to reference that. But without further ado, Alan, if I may hand over to you. What we'll do is we're going to, if you've got any questions, we'll field all the questions at the end. So please put those into the chat box or the Q&A, and then Alan will be delighted to answer those at the end. So yeah, Alan, over to you, good self.
Thank you so much, Neil, and good evening from Melbourne. It's now 6 p.m. in Australia. On a normal day, this would be having a drink. Australia, our Friday afternoons are very sacred, but times have changed. We're in a complete lockdown in Melbourne, so we're in stage 4. You cannot leave your home for more than an hour. You cannot be with more than 2 people if you go outside. Have to wear a mask. All businesses are shut. So as you can imagine, I'm getting phone calls by the hour, and it's all about cash flow. Never before has cash been more important to business. Vern Harnish very eloquently says, you can get away with decent people, decent strategy, decent execution, but run out of cash and it's game over. So today we're going to go down a journey which all of you need to understand. So as a gift to the business community, we're providing our Cashflow Story software at no cost for 1 month, so you can implement the techniques that I'm providing. So if you go to the website that I'm circling, the Cashflow Story website, so www.cashflowstory.com/stress test, you'll be able to access the software at no cost. And I'll also email to Neil all the notes after the session. What are we going to learn today? A story of numbers is told over 4 chapters. Cash has never been more important. I look at 3 cash flow measures every month. All of us want to improve. The power of one. How many 1% changes do we need to make to improve our performance? The past is very different to the future. Let's look at the future and then let's stress test our assumptions. And obviously your bank is going to play a critical role in your business. So at the end of the session, I'm going to come back and I'll make sure we've covered all these items. As Neil said, I'm a co-author of Scaling Up. I wrote the cash component. But the one thing that I'm finding today, if you don't have the right people on the bus, the A players, you will never be able to implement the techniques that I'm covering. People excellence will be able to implement cash flow excellence. Your business is no different to a sporting event. Your A players want to win the game. We need to teach the people who work for you how to understand your score and how to improve it. And the techniques that I'm going to provide to you today are easy to implement to enable your A players to play the game better. The case study I'm using is an actual company who's been through COVID-19. The company is Mylock. And ladies and gents, I'm completely bald. So the reason I chose Mylock is they're an importer and distributor of hair care products. They import shampoo, conditioners, and they sell them to hairdressers, beauty salons, and pharmacies. We employ 55 people. Until COVID hit us, we were doing very well. In Australia in March, hairdressers were basically closed. Beauty salons were shut. 80% of Mylock's business was lost. The story starts in December 2019. And Mylock says to us, revenue has grown by 12% from 21.5 to 24 million. And then Mylock says to us, operating profit, the KPI of our management team, the profit before interest and tax, is up 22% to 2.3 million. And George Mylock says, after interest and tax, we've made 1.5 million profit. And like every CEO, this is what Mylock shows the team. Revenue is up 12%, operating profit up 22%. Every financial KPI is moving in the right direction. And ladies and gentlemen, I start every talk the same way. Revenue is vanity, profit is sanity, cash is king, and we need to say queen. Cash is king or queen. My biggest problem is that we, business, focus on profit. And I'm going to ask you a question with no tricks. Mylock's made 1.5 million profit. In the chat box, please can you tell me the net cash flow of Mylock in the current year? So we've made 1.5 million profit. Cash is king or queen. What was our cash? So have a look at these numbers. Take 1 or 2 minutes, and in the chat box, I want you to physically enter the number for net cash flow. There's no tricks to this question. Cash flow is the most important number in your business. Never has cash flow been more vital. What is Mylock's cash flow in the current year? So let's have in the chat box certain answers, please. So we've got one answer so far, I think. I've got 0 from Jimmy. Peter Harrison says 1.5 million. Alan Dunn says 0. Let's get one more answer, please. And then I just want the answer, please. What is the cash flow of Mylock in the current period? We made 1.5 million profit. What is their cash? And I've got another 0. So I've had 3 zeros and a 1.5 million. I'm a chartered accountant by training, and the profession I belong to has made cash flow so complicated that no one knows what they're looking at. We're going to make every complex concept simple. Cash flow can be made extremely easy. Start the year with $10,000 in your bank. End the year with $1,000 in your bank. Your cash flow is minus 9,000. Cash flow definition number 1. I want to know, after everything's happened, your net cash flow is the change in your borrowings plus cash at bank. I can go to any company and in 30 seconds, I will tell them their cash flow. Mylock, your cash at bank has had no movement. Your short-term debt has come down from 3.1 to 2.8 million. Well done. You've reduced your debt by 300,000. And our long-term debt, also part of the bank, has had no movement. Vern Harnish says the traits of a great leader are the ability to predict, ability to delegate, and repeat, repeat, repeat. Every key concept tonight I will repeat. Cash flow definition number one, your net cash flow, the movement in your bank accounts is $300,000. All the bank accounts in this company have improved by 300,000. So when I'm sitting on the board of a company and the CEO says to me, revenue is up, margins are up, we've made a wonderful profit, I'm saying, well, can you please explain to me, why have we made 300,000 cash and a 1.5 million profit? There's a gap of 1.5 million, of 1.2 million. We need to understand it. When I say to you, what's the cash? There's one definition, movement in bank accounts. We've got to make the complex simple. Now, the reason every single company loves the profit and loss is it's easy to understand. The reason we're scared of the balance sheet, it's complex. The balance sheet is equally important to your profit. We can make this complex balance sheet simple. If you are a good leader, you need to listen to your people with empathy. I cannot give complex accounting terms to your people. They will never understand it. The balance sheet is a critical statement, as important as your profit and loss. We've got to explain it to our people. And this is the way we explain it. Funding equals operations. That's what a balance sheet is. Sorry, my spelling is bad. Funding equals operations. Funding is either through debt or equity. So if we look at the Mylock company, Mylock, your equity is 4 million. How much debt does Mylock have? They got 1 million long-term debt, 2.8 million short-term debt, that's 3.8 million, less the 100,000 cash in the bank. Mylock, your debt or your net debt is 3.7 million. Mylock, you've therefore got 7.7 million invested in operations. Your management team are only responsible for 3 items in the operations. Your balance sheet is made up of a myriad of terms. Most of them are irrelevant to your management team. The only 3 items that a management team really controls is your accounts receivable, your inventory or work in progress in a service company, minus your payables. These 3 items are called working capital. Working capital is your receivables, 5 million in Mylock, inventory or work in progress in a service company, 3.2 million, minus the payables, which is 3.5 million. Mylock has got 4.7 million invested in operations. So in other words, Mylock, within the operations of 7.7 million, you, the management team, are responsible for 4.7 million called working capital. The balance sheet has to balance. Everything else that's not the working capital, I call other capital. These are the terms: accruals, prepayments, provisions, deferred tax, other current assets and liabilities. These are the terms that confuse the balance sheet, the reason we're scared of it, but it's got nothing to do with your management team. In Mylock's company, there's one other item called other capital of $3 million, an investment in a warehouse. So if you said to me, Alan, explain Mylock's business to the management team, Funding equals operations. Debt plus equity is our funding. Where did we spend the money? 4.7 million in working capital and 3 million in other capital. So let's just make sure we've understood everything. I started today and I said never before have numbers been more important. Your management team, your A players are making decisions every day. If we don't teach them the story of numbers, they could be making decisions that are detrimental to us. Revenue is vanity, profit is sanity, cash is king. There are 3 cash flow measures. Cash flow measurement number 1. After everything's happened, what's the change in all the bank accounts? So your borrowings and your bank. So if we look at MyLock, all I need to do is list all the bank accounts at the beginning of the period, the bank accounts at the end, the movement is your net cash flow. MyLock, you've reduced your net debt from 4 million to 3.7. We then said your balance sheet is equally important. We've got to make it simple so we can engage the non-financial people. We explained the balance sheet in 1 sentence. Funding, which was either debt or equity. We had 4 million debt, 4 million equity, 3.7 million of debt. We've therefore got 7.7 million in operations. Operations consist of 2 components. Management team, you are responsible for 3 items: receivables, inventory or work in progress, minus payables. MyLock, you've got 4.7 million. The rest of the balance sheet was called other capital. MyLock had 3 million invested in land and buildings or a warehouse. So if I'm sitting down with the management team, this is what I say to them. This is what we look like on the 31st of December. 4 million equity, 3.7 million of debt. Where did we spend the money? We got 4.7 million invested in the 3 items of working capital and 3 million in other. We can now look at what this means. The movement in your debt is your cash. So at the beginning of the period, MyLock, your net debt was 4 million. We closed with 3.7 million. We've made 300,000 cash. The movement in your debt is your cash. The movement in your equity is your profit. So at the beginning of the period, we had 2.5 million equity. We made a profit of 1.5 million, ending with the $4 million equity. So now let's have a look at and see the importance and how this impacts your team. MyLock, you made 1.5 million profit. Your equity grew. You generated 300,000 cash. You've repaid the bank 300,000 of your debt. So in other words, from a funding perspective, we made this profit of 1.5 million. We reduced the debt by 300,000. Our funding has increased by 1.2 million. Where did you spend your money? This is what people need to realize. Funding equals operations. If your funding grew by 1.2 million, your operations had to grow by 1.2 million. So let's go back to the MyLock numbers and see where they spent their money. MyLock, funding equals operations. You've increased your funding by 1.2 million. Operations are working capital plus other capital. So let's have a look. Receivables, which is working capital, is up by $1 million. Inventory, another working capital measure, up by 700K. and your payables has grown by 500. Mylock, your working capital has increased by 1.2 million. And Mylock, did you spend any money in other capital? No, you didn't. So in other words, if you said to me, Mylock made 1.5 million profit, paid the bank back 300,000, so we increased our funding by 1.2 million. Where did we spend the money? In working capital and other capital. So if I was sitting down with the Mylock team, every company listening today has got one goal: make me more cash. That's the goal of business pre and definitely post-COVID. How do we make more cash? So the first thing I'm saying to you, your management team's got no control over other. If I want to make more cash, I need to teach my management team, how do we increase the profit and how do we shrink the working capital? That's what you want to do. So if I want to grow profit, this is the conversation I have every month in every board right around the world. Profit, we discuss price. We discuss volume. We discuss margins. We discuss every item of overheads. We then look at our receivables, our inventory, or our work in progress, and the way we pay suppliers. I'm having an absolute rigorous discussion. What can we do to make more cash? Everyone on my management team can understand that a story of numbers is told over 4 chapters. Chapter 1, which is what we all currently reading, was a beautiful story in Mylock. They made 1.5 million. Chapter 2, equally important. Mylock spent 1.2 million increasing the working capital. We spend nothing in other. We therefore generated 300,000 cash. Cash is the result. The quick way to calculate cash is the change in all the bank accounts. How do I reconcile it? A story of numbers is a 4-chapter story. Chapter 1, profit. Chapter 2, working capital. Did anything happen in chapter 3? Now I can explain to my management team why we generated 300,000 cash. What do I then say to my management team? I want to make more. Why did we only make 300? Imagine if the working capital only grew by 900,000. I would have therefore made 600,000 cash. Every one of my management team, every single month, is describing in detail what can we do to improve profit, what can we do to better manage our working capital. These numbers are entrenched in their heads. On one piece of paper, I can explain the business to any non-financial person listening to them with empathy. I've used no accounting terminology in what I'm describing at the moment. If you want your A players to play this game better, do not confuse them with complex terms. You will achieve the same result, a better result, if you can make the complex simple. A story of numbers is no different to reading a murder mystery. We are all currently reading chapter 1 of this murder mystery and wondering why we don't understand the murderer. The murderer is told or discussed in chapter 4. If you want to understand your story, read the whole story. We discuss profit. We then look at working capital. If applicable, chapter 3. Now I can understand chapter 4. What I'm also saying to every business, your bank has never been more important. Business speaks Spanish, your bank speaks Portuguese. If you business want to understand your bank, every bank around the world is focusing on debt service capacity. Do you have future cash to repay the bank? You will never understand your bank by looking at profit. If you want to understand your bank, become a 4-chapter storyteller. You discuss profit, what's happened in working capital, did anything happen in other capital? The result is cash. If a bank is worried about you, it means you've got a chapter 4 problem. It means you don't have cash to repay them. How are you going to fix the problem? Give the bank solutions using chapter 1 and chapter 2 to solve your cash problems. Your management team are responsible for price, volume, margins, overheads, receivables, inventory, or work in progress and payables. If we've got a cash problem, what are we going to do in profit and working capital to get there? My problem is every single board that I walk into, all the people look at is the profit, and then they move on the conversation, but it's too difficult. The boards that I'm now part of, we have discussions around making more cash. The reason you're attending today is you want to achieve a fortress balance sheet. You will get there by becoming a 4-chapter company. In today's world, in most likelihood, your company's been impacted by the virus. Your management team has a critical role to play. Never before have the numbers been more important to the management team. Make sure that everyone on your management team is trained in cash flow excellence. And maybe after this, communicate with Neil and we can arrange a 4 or a 5-hour masterclass for your companies to teach up or train your management teams. The boards that I sit on, during the crisis, we created a war room. We met weekly. Today, it's probably more monthly. We discussed in great detail every meeting, our strategy, our execution, our people, but we made sure we had a discussion around profit and a discussion around working capital, price, volume, margins, overheads, receivables, inventory, WIP, and payables. We had these discussions and we saw which levers we can play, we can adjust. Cash flow measurement number 2. This is the KPI of your management team. Your management team, as I said before, are responsible for 2 chapters, the profit and the working capital chapters. So how do we make your management team accountable for cash? So let's have a look at the Mylock business. Mylock management team, you're responsible for profit and you're equally responsible for working capital. But the profit number the management team is responsible for is operating profit, or accountants call it EBIT, earnings before interest and tax. Your management team is not responsible for interest and tax. Mylock, you made 2.3 million, up 22%, brilliant. But management team, you're equally responsible for the 3 items in working capital. Receivables grew by 1 million, inventory grew by 700,000, and luckily enough, we've utilized our suppliers to help by $500,000 in the payables. Working capital has increased by 1.2 million. So Mylock, even though you grew your profit by 2.3, you spent 1.2 on working capital. Cash flow measurement of the management team, we made 1.1 million operating cash flow. So when the CEO says to me, business is brilliant, revenues up by 12%, operating profit grew by 22%, I say, well done. But do you realize you've only made 1.1 million cash? You haven't made 2.3 million cash. Your management team are responsible for the way you've executed your working capital efficiency. So now let's see how this impacts us. Operating cash is a critical measurement to your management team. Your management team is responsible for your profit, operating profit. They are also responsible for your working capital. You might have made 2.3 million operating profit, but you've only made 1.1 operating cash. And this is the message that I'm teaching every management team around the world. Is this good or bad? What is the quality of your cash? Cash flow is the result, or cash flow is impacted when you grow. Remember, Mylock made 1.1 million operating cash. Mylock, you grew your revenue by 12%. Should you have generated 1.1 million, or should you have generated more cash? Your management team impact your cash. If we don't teach them to do their job better, they'll create wastage. Now remember, your management team is responsible for profit and for working capital. Price, volume, margins, and overheads. Receivables, inventory, WIP, and payables. Put your prices up, good for cash. Reduce margins, bad for cash. Grow overheads too quickly, bad for cash. Collect faster, good for cash. I want to show my management team each one of these levers. What can they do to make better decisions to generate gains? So when I present the numbers to my people, I say to them, can I show you what's changed compared to the previous period? Revenue's up 12%. Well done, everyone. Margins up 0.75. Brilliant. Why did you grow the overheads by 15% when the revenue only grew by 12? Why are we collecting 8 days slower? Why is inventory climbing? Good for cash, we're paying suppliers a bit slower. I can then show the management team the dollar value of this impact. Cash is the result of growth and management. Management, every time you change the way you're running this business, it's either going to be good or bad. Increase margins, we're going to make more cash. Grow overheads too quickly, cash goes out the door. Collect slower, we don't have the money sitting in our bank account. So Mylock, you might have done some good things, but overall, there's been $780,000 of bad management. So when I show cash to our team, this is what I show them. This is your cash flow. But do you realize you've had $780,000 of bad management? That should have been our cash flow. Cash is the result of growth and management. Now, this is how to implement it. Step one, look at your company and document what you think your company should look like. Get a stake in the ground. I can sit down with any one of you and I guarantee you in 5 minutes, you could tell me this answer. George Mylock says to us, every dollar we sell, we want to make 40% margin and 12% profit. We want to collect in 60 days, hold 50 days of inventory, and pay suppliers on day 60. Cash flow is the result of growth and management. Management will either do a good job, an average job, or a bad job. A green, a yellow, or a red. So for example, get greater than 40% margin, we're going to give ourselves a green. 37 to 40, a yellow. Go below 37, a red. Make more than 12% profit, green. 10 to 12, yellow. Less than 10, red. Collect quicker than 60 days, green. 60 to 70, yellow. Greater than 70, red. And every month I can show the management team how we have performed. Management team, of every company listening tonight, you want to employ a group who want to win this game. Winning means running your business in color code green. What you need to do is show your team what color code green looks like. And then every month I can sit down with my company and show them what's been good, average, and bad. Management team cannot tell you why we never made enough money, because we're running our profit in color code yellow, and we're basically running the working capital in color code red. When you go to London, and I'm looking forward, and I should have been there today, as Neil said, I love getting on the underground. And every time I get off the tube, they say, mind the gap. What I'm saying to every company listening today, mind the gap. Mylock's got a 2.5% gap in margin and profit, a 16-day gap in receivables, and a 28-day gap in inventory. We've got to teach your company to move in this direction. Cash is the result of growth and changes in management. Show your management team how they're performing, and then discuss with them how we can move in that direction. If you go in this direction, money's going out of your door. Cash is the result of growth and management. Run your business in color code green. And that's a lesson that I cannot emphasize enough. And again, if you look at this little screen, there's not one thing there that is complex. I could teach the marketing, the operational, the salespeople how to interpret this, and they would say, we now understand why we didn't make enough cash. And then the discussion in your boardroom and your management team becomes meaningful. Currently, you're showing complex accounting terms. The non-financial people who are impacting your numbers, switch off. You've got to gamify your business. Teach your company how to run in color code green. That's when you build a fortress balance sheet full of cash. I'm going to forget about cash flow measurement number 3 due to time. We are all want to make more cash. That's the goal. There are only 7 things your company can do to make more cash. Your management team are responsible for your profit and your working capital. We can change price, volume, margins, and overhead to improve profit. We can teach people to pay us faster, have better inventory management, or in a service company, invoice the work you do more frequently, invoice in advance where possible, renegotiate terms with our suppliers. The power of one is the code of a company. There are 7 levers your company can play with to make more cash. There are 4 profit, and there are 3 working capital levers. Sitting on the desk of every person from Monday morning will be this. This will be a key report in your boardroom. And this is what Cashflow Story will produce for you. All of you can contact Neil. He'll show you exactly how to generate this. But Cashflow Story will generate for your company your power of one. So in Mylock's business, increase prices by 1%, cash improves by 190, and profit by 240. Sell 1% more, we make 43,000 cash and 90,000 profit. Mylock, do you realize that price is 5 times the sensitivity of volume? So for example, if the salespeople say we're going to go and give a 2% discount to grow the revenue, my answer is, well, if you give a 2% discount, you're going to have to increase the volume by 10% just to break even on cash. How can you allow salespeople on the road and they don't know the price to volume relationship? on both cash and profit. Every 1% margin, Mylock, is 147,000. Mylock, you had a 2.5% gap there. Mylock, you got 16 days gap in receivables. Every day's worth 65,000. Do you realize about $1 million is sitting in customers' bank accounts that belong in ours? Explain it to your team like that. You can be absolutely sure when the salespeople make their next sale, they'll teach your customer your rules of payment, because they will realize how sensitive one day is to our cash. Every day of inventory, 41K. We had 28 problems. If all Mylock changes is 1%, our cash flow improves by 594, our profit by 547. Currently, our cash flow was 300K. You're basically tripling your cash flow by making a 1% change. Are you telling me every person in this room couldn't challenge their business to make a few power of one changes? The power of one is the code of the company. The power of one improves your cash, your profit, and gives you an uplift in your valuation as well. So in Mylock's company, they might say, and I do this every quarter, I have a power of one discussion. Mylock might say, let's put prices up by 2% and let's implement a reduction of receivables by 7 days. Well, that improves cash by 840 and profit by 480. This is how I do it. I go and I generate the power of one, and that becomes my reference document. I then call in the sales, marketing, operations, finance into the room, and I say every quarter we're having a power of one discussion. I put the 7 levers down the side of my whiteboard. I then give these little sticky notes to the management team. We then go lever by lever and we workshop it. Which products or services do you think we can get price changes? And then we workshop each lever. When the ideas are finished, when we've finished workshopping each concept, we come back to the whiteboard and rank them from most to least sensitive. At the end of the session, I take the top 1 or 2 or 3 ideas, and that becomes my implementation for the period. Now remember, a lot of ideas might be linked, for example, but the concept is generate the power of one, workshop each lever, come up with the top 3 ideas. And it's the repetition of this every single quarter that I guarantee you, every person listening today, this will be the most important exercise you do in your financial history of your business. I'm getting emails by the day from somewhere around the world. And my technology, as Neil said earlier, is now used in 96 countries around the world. We're getting emails by the day. This is what we're doing in our power of one. This is how it's changed my business. If you've got an issue with the bank, you take your power of one and you come up with changes to fix the cash flow in your company. The power of one is your code. The power of one fixes your profit. The power of one fixes your cash. The power of one eventually will uplift the valuation of your company. Now, over the past few years, or even less, over the past year, I've taken the power of one to a more micro scenario. So, for example, one of the boards that I sit on, which unfortunately our stores are now shut, we were one of the largest ladies' shoe retailers in the country. The owner of the company said to me, everyone thinks I make so much money. The whole management team who sees our margins think we're making a fortune. I said to the owner, explain the problem. He said, I'm making $800,000 a year. I've got 120 stores. I said, how many pairs of shoes do you sell a year? He said, 800,000. I said, so you make $1 a pair profit? I said, let's show the team the power of a shoe. And I called in marketing, the retail people, the designers, the operational people. And I said to them, the average selling price of a shoe here is $175. We make 61% margin. All of you think we're making a fortune, $106 a pair. I said, but do you realize for every pair we sell, we pay 23% occupancy, $40.50 a pair? Our retail salaries are 16.8%, $29.42. We got admin, we got on cost, we got promotion. Our costs are $105 a pair. We make $1. I then said to them, I'm coming back in a week. I want you to tell me how we're going to make $5 a pair. When I came back, the business was now understood by everyone. Who says we sold hundreds of SKUs? Who says 175 should be the average price? Why shouldn't it be 177.50? Why can't we go and get an extra 50 cents from our factories we're sourcing from in Asia? Let's go to all the tenancies and try and save $1 a pair. And what we did is we workshopped every single one of these inputs. 6 months later, we were up to $5 a pair. Unfortunately, COVID-19 has destroyed my story. And I wish I could say it's happening at the moment, but our stores are shut. Cash has never been more important. Assumptions of the past are very different to the future. In March 2020, Mylock was doing well. We then got decimated. Mylock has produced their financial statements in March and a budget for the June quarter. And this is what Mylock said is happening in our company. March was still good. We did 4.6 million revenue and we made 260,000 profit. Revenue has dropped by about 80%. We're going to get 785 revenue in June and we're going to budget for a loss of 1.3 million. And Mylock said to me, how much do we need to borrow from the bank? And I said to Mylock, if you listened to me earlier, your balance sheet was explained to you in one sentence. Debt plus equity is working capital plus other capital. Mylock, you're budgeting to lose 1.3 million. Your question is, how much do we need to borrow from the bank? Well, let's first look at what's going to happen in working capital, Mylock. Mylock says, yes, you're right, working capital were 3 items. Our revenue is almost nothing in the June quarter. We'll probably only collect 200,000. And Mylock says with a very low revenue, we'll probably only reduce inventory by 300,000. And Mylock, who's a very honorable man, says, my suppliers are loyal, they're shouting, I'm going to budget to pay them 500,000. So therefore, Mylock, if you do this, you're going to get no benefit from working capital. And Mylock also says to us, I'm not going to sell off any of my assets, my other capital. So Mylock, if you can't change the way you're running your working capital and you can't reduce your overheads to make a better or mitigate your loss, you're going to have to borrow 1.3 million to balance your equation. So what can Mylock do? And Mylock says, Alan, thank you. You've taught me the power of one. So Mylock then goes and he applies the 7 levers to his assumptions. Mylock says, why with a reduction of 80% in revenue do we not hit our overheads? So we budget for a 20% reduction in overheads, and we also budget to pay our suppliers 101,000 or 20 days slower. So now, Mylok, you don't need 1.3 million from the bank. After applying the power of one, we need 882K. So ladies and gents, let me go back to the beginning and I'll make sure you understand everything. I started today and I said, I'm giving you my technology for a month so you can generate your power of one and you can start to implement the system. Start by entering 3 years of data into the system. So enter June 2020, 19. You can enter 3 or 2 years, I don't care. This is how you start. This will generate your power of one for you. Everything I've done, the 4 chapters, is all in the software. I said to you today, we're going to learn about the 4 chapters. A story of numbers was told about profit, working capital, other capital, resulting in chapter 4, cash flow. There were 3 critical cash flow measures. We had time for 2 of them. After everything's happened, net cash flow is the change in all the bank accounts. Management team, you're responsible for profit. And I said operating profit. You made 2.3 million. You're also responsible for the working capital. We grew that by 1.2 million. We generated 1.1 million operating cash flow. I then said to you, cash is the result of growth and management. Set a profile of your company, determine what color code red, yellow, green looks like. Make sure your management team knows every month, are you running in color code green? If not, what changes do you need to make? How do we make more? There were 7 things you could look at: price, volume, margins, and overheads. 3 in profit and 3 in working capital: receivables, inventory, WIP, and payables. Run a power of one workshop every quarter and work out how many 1% changes we can make to make you more money. The past is very different to the future. Do a projection and then say, let's apply the power of one to our future, and we can start to see how many 1% changes we can make to our budget to make you more cash. We spoke Spanish, the bank spoke Portuguese. Your bank is obsessed about debt service capacity. You will never understand your bank by looking at profit. You will understand your bank by looking at the 4 chapters. You will form a beautiful relationship with your banker if you communicate to them how you're going to improve your cash by implementing the power of one. Revenue is vanity, profit is sanity, cash is king. Thank you, ladies and gents. I'm going to stop sharing and open up for questions.
Alan, thank you so much, and absolutely brilliant. Yeah, just one question that's come through already. Not for anyone else got them, please put in the Q&A box. But you mentioned the importance of the power of one, and one of the things I think people are struggling with right now is getting money in. Have you got any tips, again, as people are looking to hold on to their money, about how you go about getting those account receivables coming into your business?
Again, it's at the moment the world's on its head. So people don't have money, so they're using their suppliers as a sort of pseudo bank. But I think what I'm saying to business now, it's the person who educates the customer the hardest, the person who teaches the customer their rules will be the person who gets paid first. So when I make a sale, I make sure we're going to give you the best product, the best service, but these are our payment terms. And then I say to them, who in your accounting department do we need to speak to? when we form this relationship. So we can teach them our rules up front. So you need to educate your customer about your meticulous terms and say to them, we're going to do this for you. All we're asking from you is respect for us. And your salespeople, when they understand the power of one, they will realize that part of their job role is to speak to the customer about collections.
Yeah, no, great point. And you mentioned as well about the importance of having that quarterly session. And I think one of the things you and I have worked on in the past is the quarterly management meeting. What tools do you recommend, or how do you go about having an effective quarterly management meeting that's really, really powerful right now?
So, Neil, I sit on the board of about 20 companies around the world. SMEs. These are not the publicly listed corporates. These are the companies listening today.
Yeah.
Scaling up has got a wonderful 4 decision methodology: people, strategy, execution, cash. I've created a summary 2 to 3 hour meeting process of discussing all the key items in people, strategy, execution, cash. Can I suggest that I email you my notes and you can freely circulate it to the audience today of what do I discuss in a 2 or a 3 hour meeting?
That'd be amazing. It's such a powerful tool to use right now. And I think you can't stress enough your notes about the cadence of coming together. The war room is a great idea. I think everyone can take something away from getting that war room, that philosophy of coming together with that urgency to make sure you're not only focused on numbers, but everything else that's critical in the business. It's the top of the hour, Alan, and I know your beautiful glass of Victorian wine is awaiting you. Can I thank everybody? Well, thank you from everyone's behalf for a fantastic webinar this evening or this morning for us in the UK. It's always filled with energy. Such a relevant topic right now. And it's a shame we weren't there in person, but hopefully this time next year or earlier this time next year, we'll be back together again. Thank you so much.
Thank you so much, and all the best to everyone.
Thank you again, Alan. I think there's a few chats coming through from that. So again, just to remind everybody that coming out of today's webinar, I'll forward the recording. We'll forward again the link to Alan's very generous offer. It's a fantastic offer to be able to access to the software. Was it right for a full month? To
1 month.
Test it.
1 month.
Yeah, without fee. And then hopefully you'll see the real benefit of that ongoing. Thanks everybody who's joined.
If anyone's got issues with the software, they can contact us and we'll run through a demo of how to optimize it.
Very good. Excellent. Alrighty. Thanks again.
Thanks,
Have
everyone.
a wonderful weekend.
Bye-bye.
Bye-bye now.
So as a gift to the business community, we're providing our Cashflow Story software at no cost for 1 month so you can implement the techniques that I'm providing. So if you go to the website that I'm circling, the Cashflow Story website, www.cashflowstory.com/stress test, you'll be able to access the software at no cost. And I'll also email to Neil all the notes after the session.